Hey everyone, welcome back to Corporate Decoder, the place where we get to peek behind the curtain of these massive corporate filings and see what's really going on. Today we are diving into Kodiak AI, Incorporated's latest -1 filing. Now, this filing is essentially their roadmap to going public, and let me tell you, it is packed with some wild numbers and even wilder risks. Make sure you are subscribed because if you appreciate getting straight insights from corporate documents, you are in the right place. We also have a Discord community linked in the description below where we break down these filings even further. So, what is Kodiak AI doing exactly? They are building AI-powered trucks to drive themselves. Think self-driving, big rigs aiming to solve our thorny supply chain issues. Their system, the Kodiak driver, is already out there logging miles without a human driver. And believe it or not, they think this is going to make things safer, cheaper, and more efficient. Bold claims indeed. This document, filed on the 10th of October 2025, is all about registering their securities for sale to the public. They are talking about millions of shares of common stock and warrants. That's basically options to buy more stock that can be sold by existing investors. We are not talking about the company raising money directly from this sale, but rather the early investors cashing out. Right off the bat, they are talking about potentially offering close to 185 million shares of common stock, plus another 14 million warrants. This is a huge number of shares that could hit the market, and when a lot of shares become available, especially from early investors, it can push the stock price down. They even mentioned that these sales could cause the market price to drop significantly. They call themselves Kodiak AI Incorporated, but before this they were known as Ares Acquisition Corporation too, which sounds like a typical SPAC name. A SPAC is basically a company with no business set up purely to merge with another company. In this case, Legacy Kodiak to take it public. This S-1 filing is detailing that merger and what it all means for investors. The prospectus summary tells us Kodiak is all about AI for autonomous trucks and solving the critical problem of safely transporting goods. They are aiming to be the world leader in autonomous ground transportation, and they already have their Kodiak driver operating without a human driver. That's a big claim. They've logged over 3,000 cumulative hours of paid driverless operations as of August 2025. That is impressive if true. Now, let's get to the juicy stuff, the financials. And here is a big red flag right away, they've admitted it. We have incurred net losses since inception and may not achieve or maintain profitability in the future. This is a recurring theme in many new tech companies, but it is always sobering to see it laid out so plainly. For the 6 months ending the 30th of June 2025, they lost over $241 million. For the whole of 2024, they lost nearly $70 million. And the year before that, $57 million. They are spending a ton of money to develop this technology and scale up, and there's no guarantee it will pay off. Another point they make is that their limited operating history makes it difficult to evaluate our future prospects. This is standard for a young company, but it means investors are really taking a leap of faith. They are betting on the vision and the technology overcoming the lack of a solid track record. This phrase, on the 25th of April 2023, the company consummated the sale of over allotment units pursuant to the underwriter's partial exercise of their over allotment option, is repeated a couple of times. It seems to refer to an event related to their initial public offering. This kind of detail is important for understanding the company's financial history and structure, especially how shares were initially offered and distributed. Okay, so they've had this business combination, and as of the 30th of September 2025, they had about $146 million in cash. But here is the kicker, they don't think this will be enough for at least a year. They are already planning to seek more funding through debt or equity, which could dilute existing shareholders or come with restrictive loan terms. This sounds like they will need a lot more money sooner rather than later. Let's look at the actual financial statements for Kodiak Robotics. Inc., this is where the numbers get real. For the 31st of December 2024, their total assets were about $35 million. That might sound like a lot, but look at their liabilities over $115 million. This means they had significantly more debt than assets. And that's before we even get to the preferred stock and the negative stockholders deficit of over $250 million. It paints a picture of a company burning through cash to build its technology. For the year ended the 31st of December 2024, their net loss was almost $70 million. Compare that to 2023, where the net loss was around $57 million. It's a loss and it's growing. This trend is worrying. Now, notice these simple agreements for future equity or safes. As of the 31st of December 2024, they had almost $60 million in these agreements, classifying them as liabilities. It seems like they've been raising money through these instruments, which can convert to equity later. but it adds to their financial obligations. This is a recurring item, showing up as changes in fair value that impact their income statement. They also have these second lien loans with over $41 million outstanding as of the 30th of June 2025. These are loans that sit higher up in the repayment queue if things go wrong, meaning they are riskier. This combined with their other debts shows a significant leverage situation. Let's talk about revenue. For the 6 months ending the 30th of June 2025, their revenue was just under $2 million. That sounds low for a company this size, right? That is a 139% increase from the same period last year, which is great growth percentage-wise, but it started from a very small base. Most of this revenue, 51%, comes from government contracts with the US Army, which can be unpredictable. Their DIAS or driver as a service model, where customers pay per volt vehicle or per mile, is just starting to generate revenue, making up the rest. This sentence from their liquidity section is key. As of the end of 2024, their debt due within a year was actually more than their total cash on hand. That's a classic sign of tight liquidity. They were really relying on that SPAC deal or other financing to stay afloat. Now, for Ares Acquisition Corporation 2, the SPAC itself, look at this line: Class A ordinary shares subject to possible redemption. As of the 31st of December 2024, this figure was over $550 million. This represents the money that the public shareholders who bought into the IPO might get back if a deal doesn't happen. It's a massive chunk of money sitting there, showing how much of the IPO funds are spoken for by potential redemptions. Scroll net income $259,86059 sign center for Ares Acquisition Corporation 2. They actually showed net income in 2024 and 2023, but this is mainly from investment income on the money held in trust. It is not from operating a business. When you see income like this for a SPAC, it is important to remember it's not generated from active business operations. And finally, let's talk warrants. These are essentially options for early investors and the sponsor to buy company stock later. Usually at a set price, they have almost 40 million warrants outstanding. The terms of these warrants can be adjusted, and if the stock price doesn't go up enough, these warrants could expire worthless, which happens sometimes. They also mentioned that your warrants could be redeemed by the company, forcing you to exercise them or lose out, which can be disadvantageous. So, what is the story here? Kodiak AI is a company with a visionary goal: self-driving trucks. They have impressive technology and early traction in niche markets like oil fields and government contracts. They are moving towards a scalable DaaS model, which is smart. However, the financial picture is very typical for a company at this stage: lots of spending, significant losses, and a big reliance on future financing and the success of this business combination to survive. The sheer number of shares potentially hitting the market from early investors and the inherent risks associated with autonomous technology and regulatory hurdles are major points of concern. This is definitely a high risk, high reward play. Investors are betting heavily on their ability to execute this grand vision despite the current financial realities and significant competition. They really need this business combination to go through and then to hit their commercialization milestones rapidly. Alright, that's our deep dive into Kodiak AI S-1 filing. What's your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into the corporate world. Don't forget to check out our Discord in the description for more insights and discussions. Thanks for watching. See you next time.